Morning, everybody. It's the 13th of December. We are Signal Centre Talking Ball. I'm Joe Neighbour, and pleased to say I'm joined again by Steve O'Hare. How you doing, Steve?
Yeah, not bad, thank you. A
Feeling
little bit
better?
better, feeling better than I was last week. Yeah, definitely.
Excellent news. Just in time for Christmas, right?
Yeah, exactly.
Cool. So let's get stuck into it then today. So Boris Johnson has warned that the UK is facing a tidal wave of Omicron infections. The problem is no one believes now a word that he says. So yeah, he
Yeah,
had an announcement yesterday that he was setting a year-end end of year deadline for the country's booster vaccination programs. Said the variant has a potential to cause a wave of COVID winter deaths and fuel, almost 75,000 winter deaths, as according to latest reports. So yeah, clearly not going away. There aren't any more signs of restrictions, although that could potentially change according to some of the reports that I've read. And as you may or may not have seen, Boris Johnson has a number of enemies and they're closing in from all sides. Behind in the polls with his latest, mired in turmoil after a number of seemingly self-inflicted crises that have been ongoing over the last few weeks or so, including hosting a Christmas quiz. Um, all a bit nuts, isn't it, Steve?
yeah, it's a bit mental, isn't it? I mean, why does it take a year for this news to come out anyway? It's
No
sort of
idea.
like, if it happened last year, why hasn't it come out last year? It's just sort of like
I
it
think they're
all
hoping that
stinks a bit.
police don't punish retrospective crimes.
Yeah,
All
I
crimes are
mean,
retrospective, though, aren't they? Unless you've
yeah,
got a crystal ball.
no, exactly, that's true. Yeah, so whatever anyone got up to last year, maybe the police will come looking for you.
Yeah, hopefully, if
So
you've been
uh,
naughty.
that those in glass houses, let them cast the first stone or whatever.
Mm.
Can't remember what the saying is. We're
Well,
all
I know we're
guilty
all
of it,
very,
aren't we?
yeah, and all very bored of talking about Boris Johnson now. So let's move on to something else, shall
Yeah,
we?
very bored. Yeah, definitely.
Um, World's top central banks are meeting this week, and there does appear to be quite a significant amount of divergence, depending on where you look. We've got obviously some banks talking about moving interest rates, others talking about not, or discussing what they do with tapering. We've got final decisions this week from the US Federal Reserve, the ECB, the Bank of Japan, and the Bank of England, which it's almost half the world's economy, really. So there are 20 central bank meetings this week alone. So it's going to be a pretty spicy week potentially for markets.
Mm.
And typically December's pretty quiet. So yeah, interesting week ahead, I think.
Yeah, I mean, I can't see how they can move interest rates, but something's got to give, I suppose.
Yeah, and obviously I think it was pretty much priced in that the Bank of England would move this month, but due to what's happened with Omicron, I think that's now being kicked down the road. So the next meeting is not actually until February.
Right, okay. Seems a bit more realistic.
Yeah, so we'll see. So let's move on to some charts then, shall we, and just see how things are shaping up ahead of this all-important week in markets. I will kick off with foreign exchange, if that's all right with you,
Yeah,
Steve.
of course, yeah.
Okay, so this is the dollar index chart. As you can see, trading in this bullish channel. In more recent times, we've seen this triangle pattern take shape, which just indicates a bit of consolidation, really. We've seen a decent push to the upside today. Dollar index up by 0.33%, which is actually quite a large move. But we are still trapped within this triangle. So what we're looking for is a break either way. And we're getting very close to that point. So I would probably say if we get a break above that level there, which is 96.42 on the upside, then we can look for a continuation higher up to this 61.8% fib level, which is also coinciding with a measured move of this double bottom, which comes in around 97.68 to 97.72. And on the downside, I think if we can get a break below 95.97, then we will see things move lower towards this support zone here at 94.74 and as low as 94.47, which is a 38.2% fib level, and also the lower end of the channel. So interesting time today, it looks like, for dollar index. I don't know how much more it's got in the tank, given it's already moved 0.33% already today, but interesting nonetheless. Euro US dollar, so that continues to move lower as we've all seen, and similarly we're seeing a bit of consolidation here. Are we seeing a bit of a triangle take shape here as well? Maybe potential for obviously a continuation lower if it breaks below that, and then we'd be looking for a move down to this level here, which is at 110.58. That's a measured move of this head and shoulders top pattern, which would pretty much complete the entire move in a lovely technical fashion. So keeping an eye on that. Ultimately, I think any upside is likely to be capped around about 115.25. If we look at cable, that's on the back foot today, down by 0.33%. So we saw a bounce from this 38.2% fib level last week. On a couple of attempts, it sort of tried to get below it, but the ball supported it quite nicely. Overall, it looks very weak still, and no signs of the downtrend slowing. Any upside is likely to be capped around 133.53. If bottoms do take shape, then they tend to be a bit more of a process, a bit more sort of consolidation before we get any sort of turnaround in the trend. So for me, this just looks like it's going to be one of those that if it does rally, it's just going to be an opportunity to sell more into this strength. But that 38.2% fib level is quite important. It's from those lows back in March up to those highs that we posted in June earlier this year. So interesting that it's done a job so far, but I think it's probably going to get another test over the space of the next 5 days or so, given that we've got all this central bank price action going on. What else? Euro sterling, what's that doing? So that's failed into a resistance level there at 85.95, still trading within this bearish channel. I drew on this sort of square or rectangle here that suggested that might cap the upside. Hasn't even got that far. It's stalled at this previous swing high from the 5th of November and started to turn lower. So still expecting lower prices there. Look at the riskier assets like Aussie US dollar. That had a decent bounce and a break of this bearish channel, but looks to be stalling a little bit now. Over the last 3 sessions, it hasn't really gone anywhere. So maybe we'll see a continuation lower there in line with this, the bearish view that we've got following the break of this head and shoulders top pattern. New Zealand dollar, US dollar, that's below this key support at 68.05 and now seeing a retest of that on the underside. So that's quite interesting. Maybe that's an opportunity to sell. I've got this on, which is fib levels, which are now no longer relevant, but that resistance is 68.05. Looks to be a reasonable area to sell, expecting lower prices there. Quite a lot of fresh air, as you can see below on the downside. Let's have a quick look at dollar Swiss. Not really much going on there. Looks to be trending higher, potentially a bit of a bottom pattern forming there, but taking a bit of time to form. And that's pretty much it from me on the currency front.
Nice one, Joe.
What are you looking at, Steve? Or what do you want to start with today?
I'll start with commodities. Oils, obviously, sort of in the few days I've been off, had a nice rally. We posted a bullish hammer down around about the $62 level, and we've had a nice reaction higher. However, we did on Thursday post a bearish outside candle. A slightly more positive day on the Friday, and we started off this week with a little bit of an attempt to sort of recapture levels above Thursday's high, above the 73.20 level, but failed so far, trading at 71.85, so quite nice and volatile there. If we look at the weekly chart on this, we can see this is a potential for an A, B, C correction. So we are having a little bit of a move up, and potentially looking to sort of like find this resistance around about the 74.70, 76.35. That could be a step too far with a 50-day moving average just above that. On the Brent crude side of things, the levels come in around about $78 on here, trading currently 75.30. Similar type of price action. We had this bearish outside candle, which is quite ominous looking from last Thursday. But as I said, as the same as the WTI crude oil retested or attempted to recover from there. So still slightly positive start to this week, following through from Friday's positive price action. But I think levels above, we should find resistance between $77.43 and $78. Natural gas, we're going to start analysing this on an intraday basis as well, Joe. And this has had quite a sort of like severe sell-off since sort of like end of November, start of December. So this month we've seen it aggressively move lower. We've even seen, it's almost, could this be an abandoned baby type formation? We had this bullish hammer type candle posted from last week's price action where we broke, gapped lower, didn't fill the gap, and potentially we've started off on the positive footing this week. So that could leave a really nice abandoned baby there around about the swing low of the August move. I think 375, yeah, 375 was the level of support, spiked below there last week, but has managed to close above and looks like a positive start to this week as well. So watch out that. With this dollar strength, there is potential for gold weakness. We've seen, I've redrawn the flag formation that we're looking at on a long-term basis. This is potential to move higher, although on a daily basis, we have just retested the upward trending support line, and previous we formed a higher low here from the sort of 2nd of December. That was a Thursday, I think, and reacted higher from here, but just consolidating sideways really. We seem to be sort of capped by the 1800 psychological level. We've got the 50-day moving average coming in 1796, which will act as resistance, and 1815 above that. So yeah, gold under pressure. Momentum has stalled, but this just allows it to maybe build up a bit of potential for breaking lower, especially if we do get higher levels in the dollar as well. Take a look at cryptocurrencies. We obviously had this big sell-off. We got down on this chart. We got down to $42, which, if we go back to, let me see, on a Fibonacci basis, taking the low from way back here. That was down to the 38.2% fib retracement level, and reacted really nicely higher from there. Still under pressure, although we are looking to get this bearish momentum turning over from a MACD perspective. So on a daily basis, we're getting spikes in both directions, but again, we are getting lower highs. So I do feel that this has got more to play out on the downside. Currently 52,700 to 53,000 should act as resistance, but again it's failing below there, so definitely on the back foot for Bitcoin going into this week. Today's price action has been negative after we broke down back below the 50,000 level. Real support coming in around about 47,000. Break below there should retest the downside. Ethereum in a bearish channel lower. That's trading around about the $4,000 level. That seems to be the only one that's really fighting this this bearish move. Ripple down at 83, support just below at 75. Above we've got resistance at 94. Cardano really under pressure. This long-term upward trending support line has reacted. We've reacted from there. We've got a bullish outside candle, but that has failed from Sunday's price action, stalled doji candle and a move lower. So really a break of there looks a little bit ominous for Cardano. Take a look at the indices now. It's been quite positive. The Footsie's had a spike higher last week and sort of like tailed off towards the end of the week, and left a bit of a evening doji star formation.
It was outperforming everything else last week.
Yeah, it does seem to have done. I was actually quite surprised to sort of see this when I checked the others earlier, and that they didn't seem to have done well apart from maybe S&Ps. Yeah, so yeah, a little bit under pressure. Obviously, sort of what's going on in the government doesn't help matters when you get sort of like a lack of confidence in our governing body. Yeah, DAX stalled on Wednesday and reversed lower. We've on to a more positive start this morning, 15,760 trading up, but we posted a a lower high last week, so not really sort of. Let's have a look at the weekly chart to try and get a little bit of yeah, we've had a nice reaction higher from this supportive level down around about the 14,810 and looks pretty strong, really. Nice little turnaround overall. This Santa rally potentially is going to sort of dominate over the next couple of weeks. On the Dow side of things, we've had a massive pullback from the dip lower we saw the week before, when we thought the world had come to an end with omicron, and but the 36,500 all-time high is within spitting distance now. It's not far away at all, only about 500 points away, and that's not a lot when it comes to the Dow. Nasdaq, similar sort of price action. Nice engulfing candle from from the previous week's price action, and off to a solid start this morning. Looking to really see like a break of 16,450 to open up a retest of the all-time highs. The S&P, not far away at all on the all-time high, coming in at 4,744, 20 points away. So could reach that by the time the US open this afternoon. The head and shoulders formation on the Aussie 200 still intact, although the right shoulder looks susceptible now. 7,485. Break of there could open up an attack on the all-time highs again. China 50s had a solid week last week and pushed higher overnight as well. Broke above resistance at the 16,370 to 16,440 level, however, has failed to sustain that move and pull back below the resistance line now. Hang Seng under pressure still, not really sort of reacting in the same way that China is, but Nikkei remaining in the middle of this channel formation that we see. The price action very sideways towards the higher end of obviously quite close to the all-time high still. So yeah, overall pretty solid looking start to the week for the indices. However, still a lot to play out. Like you say, a lot of stuff going on with the central banks across the globe. Who's going to make the move? Who's going to blink first?
Yeah, I don't know. I don't know if any of them will act, to be honest, based on the concerns over Omicron. Don't know. I think the US, rather than interest rates, will be discussing tapering of the bond purchases, which obviously they've already agreed to do. It's just whether or not they do that at a faster pace, maybe.
Yeah.
Yeah, not sure. But I think we've got it on the 15th, the FOMC, and then the 16th, we've got the Bank of England and ECB. So all towards sort of Wednesday, Thursday is where we're going to start seeing some potentially interesting moves in markets. Ahead of that, let's take a quick glance at what happened with the gun to the head trades last week. Obviously, Steve, you went around for most of it, so I was flying solo. And what did I do? Okay, I went short of Ripple on Friday, made 9 ticks or 0.01%, so wasn't really worth playing. But I did have a bit of success last week. 4 winners in a row there, just under 3R. If we go for a Monday, then it's not quite as good. 2.27R all counts, of course. So, Steve, glad that you're back. I can throw you in at the deep end here with something if there's anything you're looking at, or I can take the lead. Up to you. I've got something ready to go.
You do it then, mate.
Give you an extra couple of minutes then. Yeah, so I'm looking at AUDCAD just because technically it looks quite nice. This is the daily chart, as you can see, quite clear downtrend. We did see a bit of a range going on here. We broke below that range back in November, and we moved quite swiftly lower, actually, down to lows of 89.72. in the last few sessions, we've seen a retest of the underside of this. So from a technical perspective, although we did see a close above that resistance level on Friday, maybe this is the time for sort of max risk reward, really, where it's going to start reversing. So I'm going to take a look at selling that today. This is the hourly chart that I was looking at. This was the level that was referring to. It's currently trading at 91.01. I'm going to put a stop loss at 91.57, so 56-ish ticks, and I'm going to target a move back to these swing lows at 89.70. I mean, ultimately, I think it could go lower, but obviously, I'm only looking for an intraday outcome here, so feels like a reasonable target to look at today. So looking for 2.35R on AUDCAD.
Okay,
Anything you
mate.
fancy, Steve?
Well, just looking on the short-term basis on oil, we've seen this bearish outside candle on the 4-hour chart. Now that comes to an end. We're only halfway through it in a couple of hours' time. On the hourly chart, the bearish outside candle has been confirmed, and we have sort of like moved down and filled this gap that we had from the weekend's price action. So we've got cloud support below it. So we have posted higher lows. So initially it looks like bearish this last couple of hours of price action. However, has it just filled the gap ready for price action to kick on? So I'm going to go with setting a really tight stop on this one. Fill the gap, so I can set a tight stop. 71, only a 30 tick stop, and let's just get a nice little risk reward out of there. 4-to-1 risk reward, looking at target 73.16. So that's a gun to the head trade. Getting long at 71.96, stop at 71.66, targeting 73.16.
Lovely. Good luck.
Cheers.
So in terms of economic data today, there's none on the calendar of any high impact according to the calendars that we've got. So it could be a bit of a quiet day. I guess it will be a case of participants in the market positioning ahead of these central bank meetings later on in the week. So yeah, that's I guess it from us today, Stephen. Is there anything you want to add at all?
No. Good luck this week, and we'll see how these play out.
Indeed. Okay. Have a good day, everybody. See you tomorrow.
Cheers.
Bye.